I am pleased to deliver Imperial's interim results for the 6 months ended 31 December 2020. In extraordinary and challenging trading conditions, exacerbated by the COVID-19 pandemic, Imperial increased revenue from continuing operations, generated strong free cash flow, maintained a strong balance sheet, stringently managed costs, and recorded significant progress against its strategy. A strong recovery in volumes and profitability was recorded in the first half of 2021 compared to the second half of financial year 2020. Compared to the first half of fiscal 2020, which was pre-COVID-19, revenue increased by 15% to 26.4 billion rand. EBITDA declined by 2% to 2.6 billion rand, and operating profit declined by 18% to 1.2 billion rand. Excluding the impact of COVID-19, we estimate that revenue increased by 22% and operating profit decreased by only 3%. Total earnings per share was up 96% to 437 cents per share. Total headline earnings per share declined by 3% to 185 cents per share, and continuing headline earnings per share declined by 43% to 180 cents per share. We demonstrated strong free cash inflow from continuing operations, excluding CPG, of 671 million rand, and our continuing free cash conversion improved significantly to 90%. Our net debt to EBITDA of 1.8 times is well within our banking covenants of 3.25 times. After considering the strong cash flow generation of the business and the balance sheet, and the strong recovery in operations, an interim cash dividend of 83 cents per ordinary share was declared to shareholders. During the 6 months, our business was negatively impacted by various and extended levels of COVID-19 lockdown restrictions in many of our markets, and costs relating to investment in people, processes, and systems to support our Gateway to Africa and One Imperial strategy. Our results were supported by acquisitions, strong contract renewal and gain rates, and removal of approximately 200 million rand annualized costs in Logistics Africa. The benefits of these will be realized from the 2022 financial year. We continue to make significant progress against our Gateway to Africa and One Imperial strategy. We executed acquisitions in Market Access and Logistics Africa to the value of 120 million rand. We also concluded the disposal of European Shipping for proceeds of 3.4 billion, and we finalized the sale of FarmEd. Our $20 million innovation fund continues to record significant activity and now has 5 actively managed portfolio companies. We are implementing the appropriate organizational structure to operate as One Imperial, and we invested close to 12 million rand in communities through CSI initiatives. As part of the strategy process, we thoroughly assessed the strategic fit of our international portfolio. We have concluded that Logistics International is non-core to our Gateway to Africa strategy, and we have therefore decided to explore an appropriate exit plan for this business. Given the current macro uncertainty, this may take time to progress, as the objective is to maximize value for shareholders through this process. Imperial's purpose is connecting Africa and the world and improving people's lives with access to quality products and services. In demonstrating our purpose during COVID-19, we continued to play a critical role in the supply of essential products and services to our countries and communities of operation, while keeping the wheels turning for our clients and principals. Ensuring the safety of our employees and operations has remained a priority. We continue to support our employees to minimize their financial burden during this pandemic. Imperial is well positioned to provide logistics and distribution capabilities for COVID-19 vaccines in South Africa and other African countries. We are participating in the vaccines tender process in South Africa. While some of the COVID-19 restrictions are easing, we anticipate the impact of the pandemic and the ensuing uncertainty to continue to affect our operations and performance in the short term. Subject to stable currencies for financial year 2021, we expect to deliver growth in revenue, operating profit, continuing headline earnings per share, and core earnings per share from continuing operations compared to fiscal 2020. In addition, we expect to continue to deliver free cash flow generation. Our balance sheet remains strong and we have sufficient headroom in terms of debt capacity and liquidity to facilitate strategic growth aspirations. As we continue to navigate the impact of COVID-19, our focus remains on delivering the best from current operations by making them lean and efficient, servicing clients profitably, executing flawlessly, and growing organically. This while ensuring continuous delivery on our strategic objectives and delivering sustainable value to our key stakeholders. Finally, we extend our sincerest thanks and gratitude to our employees, clients, principals, customers, our shareholders and other stakeholders for their ongoing support. Together, we are strong and resilient. We go beyond possibility. Thank you.